Bitcoin and crypto investors are in a panic. The fear is extreme, and it has been extreme for multiple days now. So what does this mean to the market, and could we find some relief over the coming weeks? That, on top of the stock markets at new all-time highs, is what we're going to discuss in today's video. So make sure you hit that like button if you are a regular here on the channel. And if you are new, you can also do that, plus hit the subscribe button. This is your home of macro cycle analysis covering Bitcoin, cryptos, the stock markets, and of course, the real estate cycle. Putting it all together so we can understand what is happening in the financial landscape. Now, I've got heaps of data coming up for Bitcoin, cryptos, and the stock markets, but I wanted to let you know about our free Ultimate Trader Accelerator that is now available to you guys. The link in the video description is right here. Register now for the free Ultimate Trader Accelerator. You will need to sign up with Bybit, Bluffin, or CoinCatch that you can find a link to in the video description, and that'll give you access to the Ultimate Trader Accelerator. Now, if you want to improve your trading and investing before the next pump or dump, this would be the place for you guys to go. So check that out now. Let's get on with the rest of the video. Let's kick it off. Fear and Greed Index was at 25, basically making it the lowest reading that we have seen in this entire bull market. 25. Now, today was also at 25. So 2 days in a row now at 25. However, the price is higher than the low. The low is at 53,500. The fear was at 29, and we now find ourselves at 25 with the price hovering at about 57 to 58,000. So there's a little divergence happening here between the market sentiment, what investors are feeling about the market, what they're saying, because this reading scans across Twitter and Google and takes all that sort of wording in and puts it into a reading for us, and the difference between that and what the price is doing, meaning that you're just starting to see on a small term time frame here the price climbing. You can see here on the chart where it's going higher with a higher low. At the moment, a slightly higher low and a slightly higher high. Ideally, for a longer term confirmation of this particular signal, you definitely need to see a close at least above the previous significant low here on the 24th of June. That low is 58,400, so ideally 58,500. And then, of course, the downtrend would be another significant area for Bitcoin to break above. Even if it breaks above and then sits on top of that line, that's okay too. So that's another strong signal. Longer term to that is the 50% level, so 63,600. So if we just take it back again to where the extreme fear, it is extreme fear from the reading here, essentially panic around crypto portfolios and Bitcoin holdings, you can see that this is starting to show at least some sort of sign here that it wants to slow down, meaning that it could still go a little lower, but the bleed to the downside seems to want to slow at this point. And why could that be happening? Everyone always looks for a why. Germany selling Bitcoin. A couple of comments I saw were around Bitcoin is almost done with selling all their Bitcoin. Although that could be true, I think it is a dangerous, very dangerous position to be in as a trader or investor, to try to find reasons for this happening once it's already happened. So they might have less Bitcoin to sell, or maybe no Bitcoin by the time we're watching this, and the price could also continue to fall slightly from that point. And then you would think, well, why is that happening? So always, it's important to just read the chart. Once you can understand and identify the price levels of strength and weakness on particular time frames, and then relate that into probabilities of how that would be occurring on the chart, then that makes life a hell of a lot easier, so you don't have to focus on the news or the fundamental headlines to give you a reason for why price might be going up or down. At the end of the day, price goes up because there are more buyers than sellers, and price goes down because there are more sellers than buyers. It's really that simple, but financial media and economic classes and so on try to tell us that it needs to be more than that. All we're trying to do is figure out, is there strength or is there weakness showing up in the chart, and what position am I going to take based on what I'm seeing in the chart. So until we get that break above 58,500, there is still some weakness showing in the chart here. Ideally, the closes above 60K is going to be a key level here towards the end of the month. And then if this low holds here at 53.5, The next key level is around $63,700. So essentially call it around 64,000 for a nice clean round number there. So that's the fear and the panic in Bitcoin at the moment. But we've also got some fear in the crypto markets, which I'll get to later in the video. What we also need to look at is the Bitcoin term and how this is trending in Google. What we see at each of the peaks for the price is also a peak in search volume interest. So this is another good sign that we might be rounding some sort of low here, where the interest in terms of search volume for Bitcoin is still trading around lows not seen since the breakout or the lows of September, October of 2023. And then we got that breakout where Bitcoin went from 25K at that low up to obviously the all-time high at $74,000. So you're just starting to see a little bit of a creep up here. However, like we could see back in the previous cycle where BTC was stalling, getting a few breakouts, going between $10,000 and $12,000 before it finally went on a big run to 40,000, then 65,000. You can see that the search volume was just doing little pumps and pullbacks, which is similar to what is happening at the moment. So I think we're possibly somewhere in around this stage here before we get onto this big final move. The fear and greed index is also suggesting this, according to my own analysis, where I'm looking at the extreme fear finally coming back into the market to reset market sentiment. You can see here, this is the lowest fear that we've seen since the bottom. We can go back all the way to 2022. That was June 2022, so basically 2 years now. And then you had the FTX collapse around this level here, which was also extreme fear, but higher than the June low. Price went a little lower, but the market sentiment was a little higher. So it was suggesting that things weren't going to be as bad as what the market was making out. So keeping an eye on this. If we start to get a little bit of a climb up here over the coming days and price takes a little more of a dump, price goes a little lower, but the sentiment goes a little higher, that's the same sort of reading as what we saw back at the FTX low. So mark that one in your books, your trading journals. Now, for you guys that have been following, you understand what my theory is, and that is that we should be seeing the rest of the financial markets increasing in value so that some of that money can flow on into crypto and Bitcoin, of course. And we're definitely seeing that with the stock markets at all-time highs. Australia, my Aussies watching, has also joined the party. New all-time high this week, just yesterday, a nice Friday close there, so new all-time high. But for now, we're looking at the CNN Fear and Greed Index for the S&P 500. It's just creeping around greed, which is crazy to think that it's taken so long to get into greed after it's been rising since the low at the beginning of the month. So you've got the July 2nd low, market's been rising. The Fear and Greed Index has basically been sitting around fear until now. We've got a couple of little days here in greed. So it went from neutral into greed. So in terms of what the S&P is doing, it's closed at a new all-time high weekly close. Yesterday hit a new all-time high price, and it's the second highest daily close. Now, I've also suggested that as the market continues to rise, we're either going to get short little pullbacks here where the majority of people are going to be hoping to get in, talking about why it's overbought, why it should be going down, why there should be a bigger correction than what's happened before because there's only a few stocks leading the index. But alas, that is not the case and has not been the case for quite some time. Whenever there are significant corrections, they have been single digits. We have to go all the way back to this entire period, back in July through to October of 2023, so 12 months ago, to get the entire range here of 11%. Now, each of these corrections were only single digits. So if you are looking to get into the market, just pay attention to the corrections themselves and try not to get too greedy on this everything bubble as it breaks into new all-time highs. Previous data from the previous video, just looking at the returns that you can get from investing in new all-time highs far outweigh investing at any other time in the market. So with that in mind, let's have a look at some of the data here, looking at the VIX and how the volatility has dropped off, what this means to the market. Essentially, the a persistently low reading in the fear gauge. So this is the fear and greed, and then obviously the VIX looking at the volatility. This can go on for quite some time. These red dots are every time that the VIX has closed below 14 on their reading on consecutive days. A rare occurrence that has happened 23 other times in history. So that's basically the last 24 trading sessions underneath a low volatility reading. Quite incredible that it can go on and on and on for very long periods of time. And yes, it's going to be met with a correction, sometimes a very significant correction, as you could see with the GFC. But again, those readings started to wane out, and you still had a few months left. This is quite small here, but I can zoom in just a touch. There was still a few months left in that before you had the GFC. So we've only had a couple of readings at the moment, and this could go on for quite some time. As I've talked about with the VIX, when it gets into its bull market range, a low volatility between roughly 11 and 17, you'll typically see this go on for quite some time. More data here. This one was quite interesting, where this bull caught up in 2 years, just as we expected. Basically, the performance after a bear market ends, coming from World War II to the current time. So looking at the data from those particular periods. So what does the S&P do during these years? The S&P 500 returned during a bear market. There it is there. It's got the bear market readings, and it's taken a couple here that are a little less than a 20%, but it's good, I think, to show a few more data points here. S&P 500 returns 1 year off the low. So where does it come after that low? You can see here pretty significant returns. You've got 100% of the time it went higher that following year after the low, which was 2022. And here is the 2 years. So looking to 2024 in this election year. And now many are finally coming to the realization that election years are typically a bullish year, and we're about 18% up off that low. You can see this was huge gains again. So the average returns 38% and 57% after 2 years. The median 57%, and very similar here, 33%, and basically a 100% hit rate from World War II. So that's the amount of data that we have for this. Now, bull markets last longer than you think. So people, from what I can see with, say, crypto, Bitcoin, I guess the stock markets as well, are getting quite fearful. You know, they're still a little panicky around these markets as they rise, as we could see from the market sentiment. And of course, with the fear and greed index, it's still at extreme fear. But if more of this money is going into these markets and then flowing out, which is obviously my theory, some people might not take that as their own theory, fair enough. But essentially, if we are seeing more of this data suggesting that there's longer to go in the cycle to the upside, more of this money is probably, no guarantees, but probably going to find its way into other speculative assets, which is the bet that I'm taking. You don't have to take it, but I guess you're watching this video and you want to see more of the info around that. If you are, and you do want to see it, hit the like button and subscribe to the channel, hit the notification bell. You guys know the rest of the deals. Links in the video description for TIA Premium and the free crypto and economic report. Okay, so this one is about the bull markets lasting longer than you think. Yes, it's got to correct, it's got to collapse, it's got to be over, etc., 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 right? The average bull market, 61 months. The current bull market is at 21 months. The shortest bull market in history was the rise out of the COVID low, which was 21 months. So we're equal to that now. This was put out just a couple of days ago. And prior to that, you had 26 months, 32, and 31. So let's see how we go from here into the next 5 to 10 months, and then we can reassess. That would take us out to 26 to 31 months, and that would now bring it equal to the 1960s and 70s, and then take on the 1987. On this occasion, that was a very significant correction, about 50%, but it basically climbed out of that very quickly, and the rest is history. That ran up into a dot-com bubble. Many years there, big gains. Yeah, the collapse was crazy, but are you here just waiting for a collapse every 10 to 20 years, or are you trying to make the gains on the way up for those 10 years? I'll let you decide that one. Next, July has been quite strong lately for stocks. We looked at this for the NASDAQ. NASDAQ has had 15 or 16 straight green Julys. Does it have to happen again? Of course not, but you know, those numbers seem pretty good. S&P 500 monthly performance the past 10 years, July, 3.1%, and currently it's at around 3% after yesterday's drop and then rise there. So call it 3.2 when this was posted on the 11th of July. So still significant signs there. Now I bring this one up in particular as we lead into the election, as the seasonality for the past 10 years, I'd obviously like to see a little more, and we've seen this before on the channel. These next couple of months might get a little turbulent. If that's the case, look at the significant levels on your chart. No breakdowns of significant levels, but corrections are okay. That is the big thing to look at over these coming months as we lead into the election in November, which is the best month of the year. Okay, so could be some turbulent times. We'll keep watching the charts, of course. Big final 2 months of the year is quite bullish for the next year. So this was a sign that we were going to have a big 2024. The end of 2023 was very, very bullish. And the rest of the year, well, the next year is typically up. We haven't finished this yet, but we'll see what happens when this next bit of data comes in. So in 2023, November-December return was 14%. Now we have to wait and see if this plays out yet again to make this another 100% hit rate of 2024 being bullish. Again, the reason for this is just seeing if there is still underlying strength in the traditional markets. Therefore, we may see some of that money flow out into Bitcoin and cryptos. I typically don't think you're going to see a bull market or a very strong bull market that is in Bitcoin or crypto if the rest of the markets are not doing so well. Risk appetite would be down. Therefore, people aren't going to risk their money in junk, meme coin crap, which I love to make money on just like you would, but they're probably not going to do it when times are a little bit scary or the markets are actually falling, like we saw in 2022 as a recent example on a short-term time frame there. And as a reminder, never listen to this sort of junk. Harry Dent, our old mate here, who's called 20 of the last 2 recessions. So he's called them 20 times, probably 24, more than 24 times. He's been calling this since the 90s. This is what he said: 2024 will be the biggest single crash year of our lifetimes. What could also be helping Bitcoin is the fall of the US dollar. Now, although Bitcoin hasn't risen, the US dollar is starting to show some significant weakness, let's say on the short term, and then we'll get to the more significant on the weekly. As you can see over the last couple of days, has started to break down. Now, all the news was moving around with the Japanese yen collapsing, but now the yen has gone up for a couple of days and the US dollar has gone down. Funny how that happens in the news every single time. Once you hear those big headlines, the Japanese yen crashing, well, it does the opposite, right? Now the US dollar has come down 2 significant days here. Now the levels I'm waiting for are 103.3 for a breakdown, and then these lows back in March around 102.3, and then it doesn't have much left under that, around 100.3, and then back to the 90, so about 99.2. So a couple of significant levels there. You can see these higher lows that are in question now after this lower top is almost confirmed. That'll be confirmed once we get that breakdown of the low here and the 50%. So clean number under 103, going to be a little bit tough for the US dollar to really come back from that and break the 107, which is part of our theory into the 18-year cycle, whereby the US dollar will probably continue down over the coming months or years. This takes a while to play out, and we have talked about it for many, many times. Under the weakness line, over to Australia, nice clean breakout here, all-time highs, probably your CBAs and banks and mining stocks are probably the ones that are really pushing this thing through. I know the majority of you are from the US, 30% of you, so who cares about the Australian market that's basically been doing nothing, while you guys have been having the growth stocks in tech and in the S&P basically just going all-time highs since, what, December of 2023. Australia finally does it. Okay, that leads us to crypto and the total cryptocurrency market cap of $2.1 trillion. It is on the 50% level. This is still a good sign here for the support to come in. Should it break down, you've still got the area back in January of 2024 of around $1.5 trillion. Now, to the upside here, looking for more confirmation that the bulls are in control, if this is the low, we'd put it to the low to the high, 50% level, around 2.31 trillion on the cryptocurrency market cap. So in terms of this fear that we're seeing in the market sentiment, lots and lots of fear. This has been going on for days now. The total cryptocurrency market cap doesn't seem to be in such disrepair. It's still above major 50% level. It's holding its ground at the moment. Some of the volume has actually continued to die off. Look at the darker colors here as the market has been going down. You can see these red bars. Now, if you were to get a close above this low, that's going to be a first solid sign that the crypto market is holding up relatively well. That number comes in at 2.1, so that's that low there. Now, if you're going to get a close or market action above the 2.17 to the 50% level, that's going to be even better. But this is the first start there, so keep a watch out for this leading into the close on Sunday, Monday, depending on where you are, for a level of 2.1 trillion. That's going to be the first key level for this market to close above. So I still think that a lot of this fear is unwarranted for the longer term. Sure, in the short term it makes sense. Markets have been down, prices of some altcoins have been crushed, and many will never make it back from this point. But overall, it doesn't seem like we're getting that significant breakdown. Now, what could invalidate this? Well, let's have a look at the major 50% level, top to bottom. That comes right through the peak of the ETF hype at 1.72. So anywhere in that box from 1.72 to the low that came in, that is not a great sign, but underneath that level is probably game over. So that's the crypto bull market game over, and that level is about, call it around 1.5 trillion. For a more precise number, about 1.45 trillion. So for now, things are looking pretty rosy. This is the altcoin market. We had the total cryptocurrency market. Now I've got the altcoin only market. This is specific. It's an indicator that we put together at TIA. You can get access to this. Link in the video description. Free 7-day trial. Check it out with the TIA GAN-swing indicator, and there'll be emails daily to show you which indicators are included for you to learn how to use them for your own trading and investing. Now, this is the total cryptocurrency market cap. You can see on the settings here, I've excluded Bitcoin, ETH, and stablecoins, whereas the other chart does not exclude stablecoins. It includes them. So we've got a better accurate reading here of the crypto market. So with this, we're still above the 50%, so similar sort of reading to the total cryptocurrency market cap. However, it didn't get as high, and it didn't get above the 50% of the entire bear market range, so top to bottom here. It wasn't able to do that on the altcoin space. However, some altcoins did make it, like Solana, which I'll get to in just a minute. But while this remains above 50%, great work for the overall market cap of cryptos, and the strong ones will probably do better in this stage. And that level is 400 billion. Now, to the downside, the low that happened on the 22nd of June is an important one to watch. That price is roughly around 310 billion, which is also just slightly above the accumulation zone here, which was 290. So for a rough round number, you start to see this thing break down under 300 billion. Probably the altcoin season is cancelled, crypto bull market over, and you might only see very select few altcoins really do anything if it comes back, because that break underneath this level would be back into the previous accumulation zone, which would mean this was basically a run on its own, and then it needs more time to accumulate once again before those moves to the upside occur. But for now, we don't need to worry about that just yet. Things are still holding up. You're still above your 310, still above 400, and it's trying to climb higher from that and close above that previous April 13th low. So that was the April 13th on the day. Obviously, the week there is April 8th. Okay, so that low is 420 billion. That would be a lovely area for the market to close above this week. Solana also showing pretty reasonable signs of attempting to close in the strong part of the 50%. And what do you do if you're in this position where there's a lot of fear in the market, but you want to start to position yourself into some stronger altcoins? Obviously, you've got to identify those strong alts. We go through that on the channel. As a reminder, hit the like and subscribe to the channel. Now, what can you do? Well, the way I see it, there are a few options. We'll talk about two here. One is you wait for less emotional damage. So it depends on you. How emotional are you when it comes to the market? Do you get triggered quite easily? The things that get said online, you're not one of those sort of people. You can't hack it. Or can you take some emotional damage? Emotional damage to the downside means that you're not waiting for confirmation that there is an uptrend and you're trying to buy the dip. You're trying to catch a falling knife. We've seen the emotional damage happen in this last month. You can 100% see it on the crypto fear and greed index. And in terms of the price chart, you can see just bouncing around here. Lows at 120, highs at 150, back to 120, then to 140. So there is a fair bit of emotional damage happening in the market there. Is it going to break down? I honestly can't say right now because it is in a trading range. You'd have to wait for it to break down or break out. So if you're in a mood where you don't want to have emotional damage in the market, then you wait for the breakout to the upside. That would be somewhere around the top here at 155, or even better, the 50% level at 165. And you can identify this on each of your cryptocurrencies. Put some emotional damage areas where, should things go down, yeah, it's going to feel like crap. You're going to be like this on the fear and greed index. You're going to be extreme fear, not knowing what to do. If you've got a stop in place, then it might be a little bit easier for you. Otherwise, take the insurance premium and wait for the confirmation that the market is in an uptrend. Yeah, you had to pay a little more for it, but what you'll get for that price is less emotional damage and more confidence that the price is in an uptrend. Not a guarantee, but more confidence that the price is an uptrend. Otherwise, to the downside, you don't get insurance. You drive your car around with no friggin' insurance, doing whatever the hell you want, taking it for a joyride, hoping to have the best fun you can, and knowing that you're probably going to get screwed one way or another. So, with that in mind, hit the like button, subscribe to the channel. The panic is there. However, there are some particular signs suggesting that we're probably somewhere in the range of a low forming. Remember, the price can go a little lower, but we're looking at a range here. As I said, like, subscribe, links in the top of the video description for TIA Premium, the free 7-day trial of the Big Ant Swing Indicator, and our free crypto and economic report, along with our channel sponsors, Bybit, Olofin, and CoinCatch, which you can all use to get in to the free Ultimate Trader Accelerator. All right, enough links, enough discussion. I'm going out for a surf. Thanks again for your well wishes while I'm out here on Kendui Island, and I'll see you guys back at the next video, whenever that may be. Until then, take care and peace out.